if you could live forever, would you?
Yes.
Okay, we're
Don't
done
even
with the
have to
interview.
finish the sentence.
Yes. No, okay, sure, that's an attractive idea. But the way I look at it is the knowledge that I'm going to die that creates the focus that I bring to being alive. The urgency of accomplishment, the need to express love now, not later. If we live forever, why ever even get out of bed in the morning? Because you always have tomorrow. That's not the kind of life I want to lead.
But why don't you fear not being around?
I fear living a life where I could have accomplished something and didn't. That's what I fear. I don't fear death.
You don't fear the unknown.
I love the unknown. I love the. You know what I want on my tombstone? My sister has this in her notes, just in case I can't tell anyone after I die. On my tombstone, a quote from Horace Mann, great educator. Be ashamed to die until you have scored some victory for humanity.
Hello and welcome everybody here on KSB TV and Abelt_Hex today with two very, very special guests. Today we will talk about Phamous, the DeFi protocol on PulseChain, where you now can go degen in, do 30x leverage trading and all of this kind of stuff. And obviously it goes way deeper than that. We have tokenomics to discuss today, where we can earn trustless fees from the platform, from the protocol, and how all of that is working. I'm discussing today with Buck and Dylan. So let's bring them on right away. How's it going, guys?
Doing well. We're doing all right today. Thanks for having us on.
Amazing. So Buck is here as well. Let me, guys, just tell you a little bit of a background story. I was a former Hex maximalist, so I do not have too much of an idea what the DeFi trading platform anyway is, right? So you guys really have to walk me through here. I have a couple of questions prepared. We have the questions from this chat, and then we want to go through Phamous.io, go through the FIQs, just so the viewers as well get a sense of what we are talking here about. And then later on, we will even do a live demo with Dylan here to see what it is to actually degen in with a 30x leverage and pump the hex price, or maybe even bring it down, right? This is the thing that we want to do today.
Yeah, that sounds pretty cool.
So first, let me share the screen here. What I have prepared here is, first of all, the Twitter post. You guys, please, I dropped it in the chat. Help me bring out the word of Phamous and DeFi leverage trading. Retweet that post. That would be great to really help spreading the word. And the first thing that I want to say is, you guys, if you want to follow along, you can read the description here under this video. And also you will find all the links here. Yes, you can see it on the screen. Perfect. And then just click and follow along with the FAQ, with the leverage trading platform, and also obviously follow Dylan and Buck on Twitter, just to bring all the engagement that we can do. And then the first thing that I want to bring up is Phamous.io. Dylan, tell us a little bit about it. I see this sacrifice is live, and just tell us a little bit about Phamous and Fiat in general, and then we will jump into the FAQs.
Sure, yeah. So Phamous is a fork of GMX. It is a decentralized leverage trading platform. It'll be on PulseChain when PulseChain does launch. What's interesting is that GMX has been around for about a year and a half now, and it's generated about $140 million of fees from its inception, which is pretty impressive. It's the tokenomics are very similar to what we have, but ours are a bit different. And the fees that are paid out are not from an inflating token. They're paid out, on GMX. They're paid out in a layer 1 token, right? So an Ethereum, for instance. And similarly, our protocol, when users trade on it, we take fees out and distribute them amongst the liquidity providers and the stakers. But into the brass tacks or the nuts and bolts of Phamous, there's a couple of ways you can play this game, right? You can be a trader, okay? So you can, long and short. You can also swap between the liquidity pools that are on Phamous, aside from, the PulseX markets, or on Uniswap if it's on, if it's operational on PulseChain, right? And you can sometimes incur, cheaper fees, or it sometimes can be more expensive depending on the situation of the liquidity pools, on Phamous, right? But so that one way you can trade, you can lever up, you can hedge your positions, long and short, various different currencies. We have things on Testnet that you can long and short, like Hex, PulseChain, PulseX, Hedron, even loan tokens on there, the liquid loans guys stuff. Zen, right? You can short Zen. Okay. So another way you can play this game besides trading, you can be a liquidity provider. Okay. And by being a liquidity provider, you're collecting 70%, or 60% of the fees that are accrued on the platform, right? And you can exclusively get all of the liquidations that are had on Phamous. Okay. And as you're being a liquidity provider, you're exposed to an index per se, from, because it's one liquidity pool with a bunch of different tokens. Okay. And they're all weighted. They all have different weights, and mostly in stables. And then, you'll have the thicker liquidity pairs have more of a weight in it, et cetera. Right. So it's like a well-diversified portfolio, and you're betting against the traders. Okay. So typically, you'll find that mostly the traders often lose their trades. And that's why these margin houses are so successful, right? In CeFi and just in trading in general, on the legacy side, right? And the third way is you can be just a staker. You can stake the Fame token, which has a fixed supply of 55,555,000 tokens, and you get a percentage of the fees that are generated through the platform, right? So in all of the currencies that are being traded, right? So, if a lot of Hex is being traded, then you're getting a lot of Hex fees. If a lot of PulseChain is being traded, you're getting a lot of Pulse fees, etc. But yeah, that's the the spiel of Phamous. And then Fiat is essentially a fork of Aave, a fork of Aave v2, with a couple of parameters to enable things like Hex to be listed on these things, where essentially it's just a DeFi bank, right? You can deposit a range of different currencies and borrow a range of different currencies, and have those loans be paid out at your leisure, right? And then by being a staker on Fiat, it works the same way as it is on Phamous. You get a share of the fees that are being generated from the borrowers, paying their interest rates and stuff like that. They're paying their loans off and whatnot. So,
and as I understand it, the very, very best thing is that we do not have to suck middleman D with all of those protocols, because they're 100% DeFi, and fees are generated and then distributed to the supporters or to the holders of the coins. And then let's get into the question here that I see. It's really interesting. I think you have mentioned it. Crab is saying, what coins do the stakers get paid in?
Yeah, so it depends on use of the platform, right? So if, like I said, there's going to be a range of different, hopefully RH ecosystem tokens, right? The goal is to have things like Pulse, PulseX, Hex, Hedron, and a couple of others, right? And then as well as the blue chips across the broader crypto market. And
can I just suggest maybe if you just go to the top of that screen and hit trade, that might kind of illuminate people a little bit about what we're doing here, just so that you can actually see the different pairs that we've got on testnet, which I think are relatively indicative of what you're likely to see kind of in the future. So yeah, if you click on any of those, you'll see those. So this looks a lot like, BitMEX or any of these other leverage trading platforms that you're already well familiar with. But as Dylan alluded to, the benefit of this is that this is happening on the blockchain, and it's not a centralized solution. And this is very important because these platforms are incredibly profitable, and generally whoever controls them makes a ton of money. So on most blockchains, you have to go to CEXs to do these things, right? And that's no good because it makes guys like CZ and Sam very wealthy, and then you run all this risk of CZ and Sam every cycle. So that's a key reason why this is better philosophically speaking than what you already have in the old world.
And this is exactly the question that I would ask here. The first one: what is Phamous Protocol, and what is its aim to achieve? Like, what is the philosophical reason why you started doing all this work, and be the first borrowing and lending, and also a DeFi leveraged protocol on PulseChain? So, what was the reason? Because everything that is out there sucks Dean is really, really bad, and now you have a solution to all of that.
Correct. Yeah. So you are the middleman when you're a Phamous token staker. You are the middleman when you're a fiat token staker. It's very important. And the truth is, obviously Richard tells people not to trade, and that people who use these sort of platforms are likely to lose, and he's not wrong about that. But some of these platforms are better than others, and some of them are quite predatory. This one is, I think, doing this in the best possible way. So one, it's DeFi. There's no KYC. There's no Sam Bankman-Fried. There's no Arthur Hayes trading against you, with the ability to liquidate you very easily because it's centralized. This is happening on chain. It's going to be owned by the community. We're going to be single-digit owners of this token. We're not going to be, oligarchs that control all of this. We are both Dylan and I are both Hex OGs. We're people that are long-term minded about this community. We want it to be successful, right? So those are very important things. The next important thing is that this is a fair protocol. It's a fair game in the sense that you have the ability to take any bet in this zero-sum game here. You can go long, you can go short, you can bet against the traders, or you can bet on the house just performing very well with trading fees, right? Or you can choose not to play at all. So that's a huge improvement over, let's say, going to FTX or Binance, where every time you make a trade on Binance, who really wins is the owner of Binance, CZ, right? Yep. So it's a massive improvement. I've yet to see anything that does this in a more fair, better way in crypto, and even in traditional finance, right? Normally, if you go to your brokerage account, Interactive Brokers or Robinhood, it's really those guys that make all the money, not the speculators so much. So it's a big improvement over that. And then the other thing I'd say about that is that whatever we do, someone will come and create solutions like this, right? And I think this is probably done as best as it possibly can be done with the most altruistic interpretation. And you won't see us, advertising this on YouTube, trying to get people to go to Mars or the moon or anything like that, right? Now, one nuance that's probably missing from Richard's statement on trading is that actually there are very useful, virtuous reasons to use these platforms, which is to have hedging, right? So any of you guys that were here for the Hex bull run saw, how price went up in 2021 to 50 cents and came tumbling down, right? So you have no way to hedge your exposure currently with Hex. And this provides you the ability to reduce your risk or add risk as you wish, to cover your positions, reduce your market beta, or even short things if you feel like they've really overheated. And you would expect to lose most of the time. And that's because you want to use these things like insurance, in my opinion, to help manage your overall exposure, right? But this is something that's a little bit more nuanced that most people don't seem to understand. But the correct way to use platforms like this is actually to trim your core position. So let's say you're very long Hex, but you think it's now gotten into the mania phase. You might want to put a short on it, right? Because you're staked for, let's say, 3-4 years, and you want to lock in those profits now. And if it drops 97%, that's going to hurt you, right? So you're happy to put a little bit of money that you're willing to lose on the side to insure against that. Now, Richard doesn't tell you that, probably because it's too nuanced for most people to understand, and he needs to talk to the average person, right? But that's what these platforms are actually there for. I don't encourage anybody to go out and try to shoot for the moon with them. But obviously, this is crypto. You guys are big boys and girls. You'll have to be responsible for what you do always.
I think the people that need to use this platform, they will know where to find Phamous.io. The normal average user that Richard Hart is addressing, they actually do not want to use that. They will probably still degen in and try it out, and then get wrecked with the 30x leverage that I have here on Zen, for example, as well. So this is probably why Richard Hart is like not advertising for trading at all, right? Because he knows the normal user gets wrecked. 95% of traders lose, especially once you do it with leverage. I mean, crypto and leverage, they just don't go hand in hand. But, somebody will come out with it, and I'm glad it is the Hexicans. I have met Dylan on the 5555 tour. I was able to talk to him already, so I know he is a diehard 5555 Hexican, and I love that the Hexicans are coming out with solutions like that. So I have already met Dylan. I have never met you, Buck. Maybe you can talk about who's the team behind Phamous Protocol and what is your guys' background, just briefly before we go into the demo here.
Yeah, easy. So we are financial professionals that have been working together for the better part of a decade. We work in the kind of more esoteric part of finance in the hedge fund world. What we do involves a lot of computer science. So that's been our background. And we manage billions of dollars as a team, and have done so for a very long time. And we also happen to be early Hexicans, and I'm a guy that's been in crypto since 2013 personally, and started following Richard in 2017. So what I've built here with both Fiat and Phamous, in a sense, is really just creating solutions that I wish I had in August 2021. I knew things were overheating. I could see people dancing on Eric Wall's coffin in a YouTube video. I realized it was time to get out, but I couldn't necessarily do much because a good chunk of my bag was staked. So what I did sell, and I'm proud of selling, by the way. So I'm not going to apologize to anybody ever for selling high or buying low. But I would have liked to have had these sorts of tools to sort of manage my risk, which is what they're there for. So I went to London in December 2021, and to that party. You might have been there actually, but I don't know. And met Richard and a bunch of people, and I realized what a strong community there was behind this. And I decided, okay, well, if the community is interested in stable coins with what Liquid Loans is doing, these are tools that I would use and I would like to have, and that I know we're going to need on PulseChain, and that I knew that, they were unlikely to come quickly, given that we're going to be pretty gate kept, I imagine. So and they're not easy to build either. This is not a copy and paste, right? You need to run oracles, you need to run fallback oracles, you need to run liquidation bots, things like that. So you need some pretty talented heavy lifting in the computer science department to build these things. So I basically saw the opportunity and went for it, and that's why we've created PHIAT and Phamous and Fatty.
That's amazing, man. Thank you so much for all the work that you're doing. And I'm really excited, just like the chat is really excited as well. You guys don't forget to like and subscribe and really bring this stream the attention. And now, before we go into the demo, I want to ask 2 questions. And the question is, what kind of users will use the protocol? And here, for example, we have the FAQ, and it says, "My name is Mike. I hate hex, and I believe Bitcoin is the only true faith because I'm heavily conflicted investor in Bitcoin mining Ponzi's. I think hex is going to zero, and I would like to short it." So what can Phamous do for those kind of people called Mike that believe in Bitcoin and they want to short hex? Why is it good for them to have a platform like this where they can do that now?
Yeah, so obviously, Mike would like to short hex, right? And hopefully, when PulseChain launches and we have Phamous, he's more than welcome to go short and take his P&L. There's a button where you can click on the demo. I'll show you guys later, where you can click share, and it goes straight to Twitter, and you can post your P&L with a nice little picture where it says short hex with the amount of leverage that you have, right? And your profit and loss, right? So these guys, if they're shorting hex, and especially if they're shorting hex with fiat, when they do go short, what that looks like is on fiat, they would go and deposit their stable coins. They would then borrow hex, and then they would sell hex on the market, right? So they would go to PulseX and they would sell that hex to try and hopefully buy it back lower, right? So what happens when the price goes up? Well, the hex price starts to go up, and it starts to be worth more than their collateral, and so their collateral is then sold to go buy hex on the market, which then makes them forcibly buy higher than they ever thought possible, right? So we think that's a beautiful thing for people that really want to put their money where their mouth is. So,
and that's a nice opportunistic. I was gonna say that's a nice opportunistic thing for us. So we know there's product market fit already because of all the hate we see on Twitter. So yeah, we're providing a solution to those guys. You don't even have to like hex or PulseChain. You can hate hex and PulseChain and still use our products. Or you can love it. It's up to you. It serves everybody.
And Dylan, how you described it here with Mike, for example, who wants to short hex, this will flush out people like Mike even faster, right? Because he will lose his position and then is forced to buy in higher than he would like to. So exactly. I think that's a really, really great example. And then we have the opposite here of Eric W., who pretends to hate hex, but actually secretly loves hex and wants to get really long at the bottom of this cycle. I'm fighting hex as hard as I can so I can accumulate it cheaply and impress Richard with my staking ladder. So how would a good strategy for Eric W., for example, play out?
Yeah, so what Eric W. might do is, go on Twitter, FUD hex a lot, right? And then maybe open, I don't know, a PSYOP short or something, right? But on the back end, also have a long open and ride the pump. And, he could profit off of the price increase of hex and then gather more hex, right? So he can lever his exposure to increase his upside, right? And then, if he wants to do something like that on fiat, he can deposit his hex if he has any, and then go borrow stable coins, and then go buy hex on PulseX or on Uniswap and ride the pump up.
In all of this time, the people holding the token, they actually win because they are earning the fees, correct?
That's correct. Yep. And, if there are, liquidations that happen on Phamous, which, that's going to happen, that economic mass is, given back to the liquidity providers on Phamous, right? So not only do you have to pay your funding position, you have to pay to keep your position open, long or short. That gets distributed to everybody. But when your position is liquidated, all of that capital, your principal is distributed to the liquidity providers, right? So if people that do not like the ecosystem want to try and short it and they get liquidated, well, their economic energy has been given to the the ecosystem regardless. So we think that's pretty beautiful as well. So
okay, perfect. So let's open up your screen share and actually do a couple of trades so our viewers, they can see how leverage trading on Phamous.io works.
Sure.
I will bring you up here right away.
All right, so let's go to Phamous, and it's pretty straightforward, right? So I have a long that's been open for a couple of weeks now on Hex. It's a 5x long. My size is 200K, and I started with 50K, and as you can see, I'm up about 2x, right? So, but we're going to open up a long on Pulse. Okay, so I'm going to use Pulse to open this long because if I use any of these other currencies to open up this long, what happens on the back end is it swaps whatever I'm using or whatever I'm trying to use into Pulse, and then it opens the position. So I incur an extra fee. So when I open this long, I'll do a 5x long on Pulse, and we'll just use, I don't know, 50 grand again. Right. So these are the fees and my entry price, et cetera, et cetera. And I'm going to go long.
And this is the normal spiel here now with putting the grays to use. What kind of gray do you have to pay? Like, does it have to be a fast transaction? I guess so, right?
Yeah, that all of that is automatic. Are you talking about through MetaMask and stuff?
Yeah, but now I realize we're on PulseChain, so this shouldn't matter too much at all.
There you go. That's right. So as you can see, the position is opening up. If the price moves while this position is trying to open a certain amount, it won't go through. Just like on Uniswap, if you try and buy something and then the market is very volatile and your slippage is not set correctly, or if your slippage is set to the typical 0.5% or whatever, and the market moves 0.5%, obviously it'll get rejected. Same thing with this. But as you can see, I now have a open position of 250K on Pulse. And I can click this share button, which is a cool feature, and I can go and share this either on Telegram, copy the link, download the picture, or tweet it, and it takes you right to Twitter. It has a tweet already set up and everything. Pretty cool.
And wouldn't that dox the people that are using this function?
It'll show you, it won't show you how much capital you're using, but it will show you your leverage and your entry point. So I guess, it could, but I'm not sure how easy that would be, right? If there's, plenty of users on the platform.
Not directly.
That's going to be
not directly. Yeah. They could probably interpolate. But I think some people want to have bragging rights more than worrying about that.
Yeah, I mean, if there's thousands of users and stuff, it's not going to be easy to point out exactly what somebody is doing. If there's plenty of people trading on it every day. So,
yeah, I see. It would be really hard to find all the transactions. All the transactions are on the blockchain. It would be possible to find out. Maybe it's like a crazy big guy, and then it's maybe easier to find this big position. But for the normal user, it's probably safe to use the function.
Yep, and you can see my the amount of fees that I'll be calculated to be paying per day, or for holding these positions open. So for Hex, I pay a little bit more to keep my position open than I do for, or actually PulseChain, I pay a little bit more than I do for Hex. Yep, just because of the pools. It depends on this equation here.
So probably important to say, when Dylan opened that position, he's just paid a fee to the token holders.
Yep.
Right. So every time people click that button, there's a cash flow associated with it. And that's one way that this token is a lot different probably than most other tokens you've ever experienced, right? Most tokens really are zero-sum games where you're depending on other people to come along and pay a bigger price than you did. There's no actual cash flow attached to them. But with this token, every time someone transacts, a little bit of the fee gets paid to the token holders, just like if you owned a piece of Interactive Brokers or the Nasdaq, or your Goldman Sachs, and you market make. As a staker, you get a piece of the action. So if they're trading USDC or they're trading Pulse, you're getting a bit of each. If they're trading Pulse Doge, you're getting Pulse Doge, right? It's constantly taking a little bit of the action. So you are the middleman, and this is an incredibly profitable business. It is all over the world, across traditional finance and across crypto. So if you can get the dominant platform in this space and be the and PulseChain successful, this really underpins a lot of value. One thing we didn't talk about earlier is GMX, which we're forking, is worth about $500 million in 1 year, and it's already paid out, as Dylan said, $140 million in fees, right? So that current valuation doesn't take into account all those fees that are already paid. You need to actually add those back to think of its enterprise value. So the spot price of the token is really representing the market's anticipation of what those future fees will be. And that gives these things a bit more price stability because they can actually do well in down markets as long as people are trading. So GMX, for example, I think in 2022 was up around 80%, while the rest of crypto on average was probably down about minus 80%. And there's a couple of reasons for that, but one of them is simply just that the growth in trading, it creates a growth in fees, which gives the token more value. And that's a very important nuance. So the listeners don't even need to like trading, and I don't trade very often, and I'm a financial professional, right? But boy, do I like earning fees. And so you see Dylan over there, he's earning those fees on the right there. And every time there's a transaction, he gets another piece of it. So I think you'll see this as something that's a big deal in the next cycle, when people will start to actually demand real functional utility from a lot of coins as opposed to just meme coins. I think meme coins will still exist, but this actually opens the door for a lot of very big investors who can never get past that zero sum kind of pump and dump style that you get with things like Bitcoin or Dogecoin or whatnot, where there's really nothing underlying its value except for the idea that someone's going to come along later and pay you more money. When the big boys see protocols like this, and they aren't even aware of it yet, that actually just pay out hundreds of millions of dollars of fees, and in the bull market, it's going to be billions of dollars of fees. That's when they'll start to pay a lot of attention to crypto. They'll take that very seriously.
Well, Buck, you were mentioning the meme coins here. I always like to say, well, they just have a good social consensus, because that's at the end what all of crypto is, a social consensus where the market gives it the value. But you're obviously 100% right. It helps to derive the value with really benefits like you have here on your protocol. I think that's amazing. And let me ask you this question. You have elaborated on that already a little bit. Is leverage trading good or bad? Like, if you would have to play devil's advocate, what would you say is bad on it? What would you say is really good on it?
Yeah, so obviously the grown-up answer, and I'm a fan of giving grown-up answers as opposed to children's answers, and I'll assume you're all grown-ups here. The grown-up answer is that pretty much everything has good and bad to it, right? And can be used for good or bad, right? Medicine can make you overdose or it can cure you. That's just the reality. You need to have expertise. You need to know what you're doing. There are proper ways to use medicine, right? If you're not a doctor or a pharmacist, you probably aren't an expert. So, should you just be prescribing yourself Oxycontin and taking whatever amounts that you feel like? No, obviously not. You probably want to go speak to your physician and see if that's appropriate medicine for you. And if you are going to use it, what dosage is acceptable, right? Everybody wants things to be easy. They want it to be black and white. The real world isn't that way, right? Guns kill people, but they also defend people. They also help us uphold the law. They also help us defend ourselves from, barbarians, right? So, I think the first thing is to acknowledge that the world is not black and white. So on leverage trading specifically, it's a beautifully virtuous thing in the sense that it allows you to isolate your risk, right? So you can get 30 times your exposure by only risking a very small amount of money, right? And that's actually a very useful thing if you're trying to manage your risk. So you don't have to mortgage your house if you want the upside, right? And you're pretty well convicted. You can put down 1/30th the amount and make that bet as opposed to putting in everything you own. So that's an incredibly useful thing. It also lets you hedge your position. So let's say you have a massive bull run in Hex and you're now stupidly overexposed to the price of Hex, right? To the point where if it drops 97%, it's going to really ruin your year, right? Well, you can now spend a very small amount of money comparatively and basically hedge out your entire exposure, right? So if you've got $30,000 worth of Hex, you can spend $1,000 to short it and basically neutralize your position without actually selling, right? Super, super useful. And people who manage money professionally do this all around the world every single day using tools just like this. Okay, so that's the virtuous side of it. What's the non-virtuous side? The non-virtuous side is when you go to YouTube and you have teenagers telling you, hey guys, go buy this coin. It's going to go to the moon. And I don't have any fucking reason why, except I'm a teenager with a good looking face and I say so, right? That's not investment. That's basically front running and creating a pump and dump, which, by the way, are illegal to do in traditional finance and in the real world. So that's terrible, right? You're not going to see us doing that. As you said, anybody using this platform knows exactly what it is, and it's not their first rodeo, right? So we're not gonna sit outside of candy stores trying to get teenagers hooked on leverage trading. Never, won't happen. But that's what some people do, right? They plus 500 eToro. They're in your YouTube ads if you don't have premium like Dylan because he's poor, you get these ads every single day, and the people that are using them might only have high school educations, or if they're Hexicans, even less than that. And that means that they're probably not qualified to be managing these risks and using such platforms. So I think they can be good and bad at the same time. But if you're Richard Hart, he likes to keep his messages simple and speak to the average person, and I understand that. So he'll just say bad. This is bad, but in reality, it's much more nuanced than that.
So what I'm advocating on is that I will learn myself to maybe use a platform like this in the future, help my fellow Hexicans to have their eyes open and always learn. And then in the future, when there is a big bull run, and you said it so well, you are so high exposed to Hex did 10,000x and you are all staked. Now, it would be actually great to use a little bit of your liquid Hex to hedge the position. I totally get that. I cannot wait for the next bull run with PulseChain. You made me already really excited, and then I will help the Hexicans to use the Phamous Protocol in a good manner. So let's go into the questions here a little bit before we continue on with our stream. I have Ryan Lopez here, and he's saying, let's say Phamous address has a balance of PLSD, which I know you were able to scoop up a little bit, but no Pulse Bitcoin. What does that mean regarding limitations of loaning, shorting those assets?
So when you are a liquidity provider on this platform, and let's say that there's maybe 200K worth of liquidity for PLSD, or, if there's, 200K liquidity of PLSB. Okay. And all of that is being lent out in active positions. You cannot open up another position. You can't over leverage anything that's not available, right? So you can't, for instance, if the pool's maxed out, you can't open up another position to try and long or short, PLSD or PLSB. If it is supported on the platform, you could be a liquidity provider of these assets, so other people can long and short them, or you can just do it yourself, right? So, I hope that answers your question. But yeah, if there's no liquidity provided, can't trade it, right? Yeah, it is what it is. If there's liquidity provided and everybody is using that liquidity in active positions, you have to wait. You can't trade it. So.
All right. So let's go to the next question here. Famous Sacker here. Good morning. In an excellent product, but its staking features are somewhat complex to the average retail user. Does Famous simplify those staking features?
Yeah, so GMX has some wonky staking features, yes, but we have pretty straightforward. You stake your coins, and you get a revenue, get a shared revenue of the platform, right? So you'll get paid out in the things that are being traded. If there's a lot more of the Pulse being traded, you're gonna get more Pulse fees. If there's a lot more of the shorts and USDC being traded, you're going to get a lot more stables.
I'll add, if you can stake Hex, you can definitely use our platform, because it's basically the same thing, except you don't even have to think about your time. With Hex, you actually have to understand T shares and your time preference, and whether you want to be locked up for 30 days or 15 years, which is a huge fucking decision, by the way, that people don't think enough about. With our thing, you can basically stake it, and you can unstake any time with the 14-day cooling off period, and you collect fees throughout that cooling off period as well. So it doesn't really, so nothing's actually stopping you from basically staking and then immediately unlocking it and collecting it in 14 days if you so choose. So it's actually quite simple in that regard.
Yeah, and the fees are perpetual, so you can claim them every hour if you wanted to. There's not a daily drop in fees or anything like that, like how Hex has the daily tick over or anything like that. You literally stake it, and then you can just leave it there for as long as you wanted. There is no set day where you have to unstake or anything like that. You click claim when you want to, and then if you want to unstake, you click unstake. It's pretty straightforward.
Sounds really easy to me. So Galactic Pulse is saying, how do they plan to protect their users from fraud and theft, since these are unfortunately very common in the world of leveraged trading?
That's a wonderful question. I'll answer that one, Dylan. Sure. So this is happening on the blockchain, so it's all verifiable. You can see it, right? It's part of a contract. So that kind of the kind of basic fraud is less of an issue. Now, can people move the markets and push the price against you and make you lose that way? Absolutely. And so you need to go, if you're going to trade on these platforms, and not just our platform, any platform, you should always be cognizant of that. That's not possible, nor is it our duty to stop the market from making you lose, right? So that's one thing to keep in mind. So if you are going to trade, you need to know that there are whales that will push the market every damn way they please, and they can push it up and they can push it down, and that's what basically they do all day long in every crypto, and they also do it in stocks, by the way, right? So just kind of keep that in mind. You're not exposed to this risk, however, if you're just staking the Fame token, right? You're just collecting a fee every time someone comes along and uses the platform, right? So, you need to decide what risks you want to take and that you're comfortable with. But yeah, the market can and will move against you. Bad actors can and will do that. And, you should not put your life savings into this platform or any platform like it for that reason, right? Even when you're right, there's nothing stopping a whale from coming in and sending the Hex price down temporarily enough to liquidate you, right? So, just keep that in mind. Don't gamble. Don't risk more than what you can afford to lose. Take little bites, right? Little pieces, right? That's the right way to think about it. It's similar to life insurance, right? You buy, when you use these platforms, you want to use them like insurance, right? You buy life insurance hoping not to need to use it, right? Because if you do need to use it, it means you're dead, right? So that's what these things are here for. They help you manage your overall risk. So think about what's already in your portfolio. How much exposure do you have to Hex? How much exposure do you have to Ethereum, right? Is that now an uncomfortable amount, right? Maybe you want to reduce that risk, right? Or maybe you don't have enough exposure and you want to increase that, but you don't want to risk your entire life savings by mortgaging your house and being in a documentary and buying a Hex at 36 cents. Maybe you don't want to be that guy, right? So instead, that guy can take instead of putting $250,000 of his life savings in, he could put in, let's say, 20K, 30K, right? And go leverage long that way and get the same exposure. And if he's wrong, he's only lost 25, 30K, right? Which happens. Investing is really hard. I'm an investor. I'm wrong about 45% of the time, right? And that's actually a good number, right? Really good investors are wrong about 40% of the time, the best guys, right? So you're always going to be wrong in investment, and it's part of knowing the game.
But my guess is Galactic Pulse was talking about those things that we see so often in crypto, which are called scam wicks. Is there something that you can protect your users from that?
TWAPs. Time
What is
weighted
that?
price average. So
All right.
So essentially, it has an average price for a period of time, and then if there is a wick or a scam wick, it kind of eliminates that. You have to hold the price up or down for I don't know, 5-10 minutes or so before you actually are able to liquidate that person. You know what I mean? So, but yeah, TWAPs can solve that problem.
I think the next question will be really easy to answer. Hello, Abed. Love your show. And Dylan, if you stack for Phamous, will you get as many fiat tokens as you do for Phamous, or how does it work? So I'm guessing he means the sacrifice that has been done for fiat already. Now he maybe doesn't know that there is a sacrifice for Phamous as well, and this is going on right now, right?
Yeah. So I don't know if you can hear me. My mic shut off for a second.
Yeah, I can hear you.
But there was a sacrifice for fiat back in April, and that sacrifice is over. It was around for about 5 days, and then we hit our target and closed it. Okay. And then for Phamous, the whole purpose of why it's called the early bird sac is because the TVL that the funds that are being raised now are to bootstrap eFiat, which is fiat on Ethereum. Okay. And so you get when you sack, you get a allocation of your Fame tokens, and then a bonus of eFiat tokens at you get less eFiat tokens than you do the Phamous tokens, just because it's taking the original sack set from fiat, and it's just taking the coins that were in the treasury and allocating those to be a part of this sacrifice. So it's at a I guess you could say dollar wise or sack wise, you're getting less tokens than you did or are getting for Phamous. So yeah, it's not the same. Like, it's not, I get one Fame token, I get one eFiat token if I sack now. So that's, if you want to find out the details, go to the Telegram, t.me/PhamousX, and then type !sack, and it'll give you all the pertinent information in the brass tacks about all that stuff. So.
And we were already talking about that you guys will not advertise to the common users. So JB is asking, what are you doing to advertise and get the message out about Phamous? How will you market this to big boys and even average crypto users on the chain?
Yeah, so we did our fiat round to the big boys. That's why most of you guys didn't hear about that, and that's why we raised our funds in about 5 days. Okay. And in regards to Phamous, we're here right now. We are, doing the YouTube shows. You'll see Buck in a lot of Twitter spaces. You may see other things, but we're not going to promise that we're going to have this extreme marketing thing or anything like that. But
nope.
Yeah,
have no expectational work of others for sure on this, guys. Dylan's just a guy that hangs out in Florida, and I'm just a voice that you hear on the internet. So yeah, we're not going to be advertising or marketing this directly in any way, JB. But I will note that part of my strategy is that I've already got the community pretty heavily involved. We've raised, $7 or $8 odd million in the bottom of the bear market from thousands of Hexicans. So I'm pretty sure that means those people at least are incentivized to tell their friends about this thing. So maybe they'll go do that, but yeah, it doesn't require any work from Dylan or I. So that's a pretty important thing. We could have just kept this to ourselves, right? We could have just launched this thing on PulseChain, not shared any of the tokens with you guys. But instead we gave away 5% of them to the fiat guys, and we're letting everybody else get in at a pretty low valuation, single-digit million valuation. And when you back out the treasury, and that's giving people a lot of incentive to go out and promote this thing themselves. So yeah, it doesn't matter if I get hit by a bus, or if Dylan decides to go fishing. There's going to be a lot of people that are going to let people know about this, and I think we're likely to have first mover advantage. I think we're going to be pretty gate kept. It's going to be a while before anybody supports what we support on PulseChain. And I think that's the important thing, because we'll get the TVL locked up as well. We'll have the most size. We'll have the most users. The biggest boys and girls in this ecosystem are already invested. And I think that's, the key to this. So, yeah.
I said it already in the introduction. I heard you speaking in a Twitter space, so I just became a fan of you. That's why I wanted to have you on. And you are doing a lot, actually, right? In Telegram, in Twitter space. And even though you should maybe be at home, because Jimred is saying Buck just got a baby. Congratulations to that little baby Buck. And you're still being here, talking with us on the stream. So thanks for all you do without having any expectations. That's great. And we are already seeing how Phamous will grow in the future with baby Buck already there, maybe starting to manage this fund or that fund. It's going to be really exciting for this little boy. So I want to share the screen here again, because now we were talking about Phamous Protocol, and here's the Fame token and also the PHLP token. And we have not talked too much about fiat. Is that correct? So let's get into this topic a little bit. Give us the elevator pitch about fiat.io.
Yeah, so Fiat is a DeFi bank. Soon we'll have it on Ethereum. It is targeting the RH ecosystem, right? So, it's a fork of Aave with revenue sharing tokenomics. Okay, so it works very similar to the way Phamous. It's actually the same tokenomic. Fixed supply, you get a share of the revenue generated on the platform. But essentially, fiat is a place for you to be able to deposit funds and borrow others. Okay, so if here's a prime example, say you're a large hex holder, okay, and you need money to finance a business venture that you want to start up, in, let's say, t-shirts, okay, but you don't want to sell your hex, okay, well, you can take your hex, you can deposit it on fiat, you can go borrow a stable coin, do what you got to do, take it to Coinbase, finance your thing, do what you got to do, and as you make the cash flow, you pay back your loan, right? And you pay a little bit of interest while you're doing that, right? That's probably the easiest use case that you can have for fiat. The more advanced things that you can do is you can speculate with it. You can take out low leveraged positions on certain coins. You can use flash loans. So For those that don't know what a flash loan is, basically it's like taking a loan with no collateral and borrowing. You can borrow millions of dollars, and so long as the transaction is profitable in one block, right? So you go borrow the funds, you do the trade, and then you pay back the loan with interest in that single transaction. Then the flash loan will execute, okay? And you pay a transaction fee, basically. This is available on Aave. You can see people arbitraging with flash loans. Whenever somebody is doing that, they pay a fee and it goes to the stakers. So pretty cool. But yes, essentially it is a place for, the decentralized bank, right? Something I like to note is in regards to Aave, which this is a fork of, when the Celsius and Three Arrows Capital debacle happened, both of them had positions on Aave, okay? And guess who they paid and made sure that they paid while they were going through those issues? They paid Aave back, because they can't write an email to Aave and be like, hey, yeah, we're good. We totally have plenty of liquidity. We're fine, right? They can't email Aave to extend their line of credit. It's in the blockchain. Their shit was near liquidation. They were selling NFTs that were worth 30K to try and pay off their loans as much as they could. Otherwise, they would have been liquidated, right? Because the blockchain doesn't lie. It doesn't care. It's programmed to do one thing, and it was doing exactly what it was doing. So,
and you can't go to bankruptcy court to deliberate against it either.
Yep.
That's the other thing. Can't commit fraud like the Celsius guy was doing. And this is the real big miracle of this last cycle, is that you saw things like Celsius, BlockFi, Voyager, which are basically the traditional finance equivalents of fiat and Aave, right? You saw all of those things fail, and that's very predictable. That happens every time a bubble pops. You see these things which are called shadow banks break. Happened in 2008, happened in China in 2015. It happens every time there's a big bubble and a big pop. Which is what we experienced in 2022. And Aave, because of its fully visible, transparent mechanism, is basically doing absolutely fine. When all of its competitors in the traditional finance world basically went bankrupt, either because they committed fraud, because they lied, or because the people that they were counting on to pay them back actually, committed fraud and lied. So, it didn't even matter if you were a good or a bad actor, you still went bankrupt. Like the BlockFi guys probably didn't really do anything wrong, right? But they're still bankrupt because, they were owed money by other people who did bad things, right? And suddenly, everybody loses faith in them. And I think the best thing that's happened in this bear market is really actually you see the innovation that DeFi really brings, and how it's actually a world-changing thing. It's a massive deal to be able to use things like Uniswap, which trade billions of dollars every day without any employees, without any counterparty risk. This takes lots and lots, tens of thousands of people to accomplish in equities or bonds, and this just happens in crypto with some code. It's beautiful, and Aave is just an extension of basic corporate lending, right? That happens every single day. Big players, big business, they need to borrow money. They deposit some assets and they go and they borrow, right? That's the CFO's job, and that's what Aave and Fiat are really doing. They're more of business to business type of solutions for large users, and I hope that by having this on PulseChain, it's going to attract these types of users as well, because the good thing about these guys is they don't care about us necessarily or PulseChain or Richard. But they will go where they can get yield or where they can get the best lending, right? And these things have to move towards equilibrium. So there's an opportunity for us to really disrupt this space. And we're launching this on both Ethereum and PulseChain, right? So, we could potentially take big market share from Aave. Just by having a few more coins that they don't have, or by having better tokenomics or more attractive rates, either on the borrowing or depositing side. And the Jets in the chat say, look at the success of Aave. Richard talks about 10,000 X's. Aave is a 10,000X coin. It raised about $17 million, I think, in 2017, and did a 10,000X. Had a valuation, several $1 billion at the top of the bull market. It's a massive success. One of the biggest successes in crypto ever is Aave, and it has terrible tokenomics, and it's still a massive success. You don't get really a share of the platform fees when you use Aave, when you deposit Aave token, right? And it's still worth billions of dollars just as a governance token. It'd be worth tens of billions of dollars if it had our tokenomics. So it's a really big deal. It's maybe less exciting to average users because it's sort of boring stuff. Okay, so I deposit my stable coins and I get 3%. Why should I care about that? I'm in this for big gains, right? But the guys that have tens of millions of dollars or hundreds of millions of dollars to put to work, they care a lot about that, and they also want to be able to leverage. They want to be able to move markets. They want to be able to short, and this is how you do it in DeFi, right? Our other platform is not actually using spot prices, right? It's taking prices from PulseX or Uniswap and playing a zero-sum game. Whereas this fiat protocol is actually taking spot prices, and the crypto being moved around there is real crypto, and it's being bought and sold and borrowed and leveraged on our platform. And that has huge ramifications because it means that if you're a whale, you'll be able to leverage Hex or whatever you feel like doing or short it. So we'll see hopefully some big boys come in and use these platforms to push price wherever they damn well feel. And it'll be like a contest. Some days they'll think it's expensive. They might come in and short it. Other days they'll think it's cheap, right? And that's how you get a market. So it's actually beneficial as well because that helps you get a better price discovery. One thing we were missing in 2021 was we had no ability to actually say, what, I'm shorting this. I think it's ridiculous, right? When it got ridiculous. So now you'll be able to do that as well potentially, and it's just a wonderful thing, and it also allows for big boys to basically de-risk or deposit their Hex, let's say, rather than sell it, right? So if you're a Hex OG and you now have a need for $1 million of cash, but you don't even necessarily want to sell it. You just need this cash, right? You can just deposit your Hex to the platform and borrow the stable coins you need, and you can still be a long-term holder, right? And that's a huge advantage, and that's what billionaires do every day in the private banking world. They go over to UBS or Credit Suisse, and they go, hey, look, I'm a CEO of a tech company. Can I borrow $100 million to buy an island? And can I put that against my company? And that's what they do. Credit Suisse or UBS just goes, yep, we'll give you $100 million in cash. We'll charge you this much, right? And they go, great, thank you, and that's it. So it's a very useful tool. It's maybe less apparent to the average user how they'll use it, other than just you deposit your coins and get a deposit rate. But it's an essential DeFi primitive to really making PulseChain something that really big money can actually come in and use. If we don't have this, we're not really ready yet for them.
And Fupa is saying, look at the success of Aave. You were just speaking of that. And I think one of the reasons why Aave was successful is because code is not corruptible. The people that borrowed and lended, they had to pay their dues, right? So this is really speaking for DeFi and speaking for Phamous Protocol. But now you're also a competitor for Aave, for example. And we have Crab here saying, what would you say to the comfort, the big guys who are unsure of using these both protocols? Fiat and Phamous.
Yeah, that's a good one. So with Aave, there's risk with both of these things, right? And exploits do happen. The nice thing about Aave is that it's been around now. It's been through a whole cycle, and it's seen extreme volatility. And that's also true of GMX. It hasn't been around as long, but that's the first thing is, we've had a pretty good stress test with Luna Tether breakdown, or sorry, Luna Terra breakdown, right? So that personally gives me a lot more comfort about them, because that's about as bad as it can be in terms of market volatility. That was an absolutely disgusting down move, very, very strong downward pressure, and both these protocols survived that. Obviously, they've been audited. Aave's been audited many times, and they have been running successfully for quite some time. We've also additionally put in additional controls that allow us to reduce risk in the protocol overall. This doesn't exist in Aave v2. So that's another feature that we built in specifically to help us deal with the kind of Hex Richard Hart ecosystem, where you do have a lot of whale risk. You have OA risk as well. Although I'm completely comfortable with OA risk, it's there, right? So I have an answer to it in that regard. But having said that, if the OA is determined to destroy Hex, he can, right? That's just the reality. I just don't worry about that happening. I've decided that that's such a small odds, probabilistically speaking, that there's no chance that I'm not going to worry about that. I'm more worried about being hit by a bus, walking to get coffee than I am worrying about the OA killing Hex. It's probably similar odds. So yeah, those are probably the main things. Institutional code that's been tested through a full cycle, and that makes it more valuable. That really does. If you don't know it doesn't work because you haven't seen it work through various markets up and down, then it's just not as safe. And that's why they use the same code that they use in the 60s oftentimes to run airplanes or rocket ships. It's because it's tested and they know it works. And it doesn't. If it ain't broke, don't fix it. It's sort of the mentality, and there's truth to that. You do want to innovate, of course, but in reality, it's like this is a very basic function, and just having something that we know works is really all it needs to do. J.P. Morgan or Raiffeisen have been doing the same stuff for the past 200 years, right? And it worked then, it works now. It serves an economic purpose. So you don't necessarily need it to be too fancy, and that's what this is doing.
So look, with you guys being here, it gets everybody really excited about those products, obviously. So you have to answer this question from Hex Huddle here. The testnet trading is smooth when ETH launched, sir. Yeah,
so we are currently getting fiat audited by Certic and Solidity Finance. We are told that will be ready on the 24th. If there's no adverse findings in the audit, which there shouldn't be, given that it's, we've basically taken the Aave v2 code and just added some more tight constraints to it, the ability to apply tighter constraints. Then we're looking to launch towards the end of February, maybe the beginning of March on Ethereum. So that's, sort of where we're at. Obviously, to quote Richard, software is hard. If there's problems found in the audit, that could push us back. But yeah, that's where we're at currently. And yeah, we're expecting to be live, in about a month's time. If all goes well, and I'll be going to eat lunch with the dev team shortly, and basically tell them that I've told you guys this and that they need to get off their Xboxes and get this thing up and running.
Whereas, as I understand, you don't want to push your devs too hard, because then they will make mistakes and then billions of dollars is on the line. And how to track all of those billions of dollars that are going on in your portfolio or even on those platforms. And I think that's what is Fedi for, right? And we are seeing here the demo for Fedi. Can you tell me a little bit more about that platform?
Yeah, so why don't you go to the public section down right there, and then click on Dummy Bundle. Right. So basically, Fatty is a place for you to view all of your assets across multiple different chains, and with the unique support of the RH ecosystem and things similar to it or related to it, like Hedron, Icosa, all of your hex stakes. If you click on hex on this dummy bundle, you'll see that this particular wallet is a squid. You'll see his stakes, his interest to date, the T shares in those stakes, et cetera, et cetera. If you scroll down, you'll see liquidity positions that you have open, and you can see this is a hex stakes on PulseChain, right? So on the testnet, as it sits, but you'll see your tokenized HSIs for Hedron, Icosa stakes, tons of different stuff, right? The purpose of this is for you to be able to, aggregate everything that you're doing across multiple different chains, and just have a really good understanding of where all your money is, right? And then there's a feature that we're still being worked on, where bundles, right? Where you connect your wallet and you add a bunch of all of your other wallets, and then it'll all aggregate it into one place, so you can see what's going on. We think that this is a necessity, and we plan on supporting as many of the projects that are relevant to the space as possible. Like, as you can see, down there below the Fiat and Phamous, you'll see Hex, Hedron, PulseX, Liquid Loans, and if you click on these respective links, it'll take you to those websites and everything, right? And so our goal by having this is to direct people to our products and allow the access to everybody else, right? So if you go up there, scroll up a little bit, and you see the earn next to Pulse, it'll take you right to Fiat, and you can go down a little bit in the wallet where it says the little earn tab on the right.
Speaking about the right hand side there.
Yeah, right here.
And maybe I'll just add in, similar tools already exist, like DBanker, Zerion, or Zapper.
Yeah.
But what made me want to do this was that I noticed that they never tend to support Hex, and I imagine they're not going to do a lot for Pulse. I imagine they're not going to do a lot for PH products. So about 6 months ago, we hired a third-party dev to basically start building this for us, and that's really the why. This is a tool I wanted for myself. I want to know just how exposed I am to everything at a given point in time, and it's also useful for tracking your risk and also other people's risk. You can see what Godwell's up to. You can see people's trading history and things like that. So a lot of people like to eyeball other users. It's not really my thing, but you could do that with this as well. And we're not monetizing this. There's no token here. We'll monetize it indirectly, as Dylan showed you, just where it might suggest that you can go deposit some Pulse here, or maybe trade this or that. But it'll also help you stake your Hex and do other things like that longer term. It's really just about creating a horizontal integration across our product suite. So, not everybody likes depositing and earning yield. Not everybody likes leverage trading, but some people will like just knowing how much money they got, right? So we've done this, and it also, I think, helps with transparency. So you're seeing there are various sacrifice projects. Those are fun to click on, some of them, because you'll see a lot of them don't have much money anymore in their wallets, and other ones still have all the money in their wallets.
So what we see here right now, we can see PulseChain, PulseX, for example, but also Godwell and all his addresses. Are all of these addresses like his real addresses and all the funds in there, his real funds?
You think so?
I see 666D, so I can definitely confirm that this is the Godwell address. And now it would be just to be interesting if all of those tokens he really holds, because I cannot imagine he holds $3.8 million of Texan token. That would be crazy.
So he does.
Wow. Amazing.
Yeah.
Congratulations to Godwell and congratulations to all the Texas people to help make Texas an independent country. I think that's a noble goal.
The caveat there is it's probably not worth $3.8 million if he tries to sell them, maybe. But
I see what you're saying here. Awesome,
But,
you guys. I think this was a really good stream, and we will do that for a couple more minutes because we want to give the people watching a couple more chances to ask questions. And I will ask you guys: is there anything that we have missed so far in our stream today that you definitely want to pass on to our viewers that they need to know?
I think that we've hit all the points. We should probably mention that the Phamous SAC is ending, relatively soon. A couple more weeks, and I think it'll be called. And if any whale does come along and decide to fill it up, it'll be closed. So there's that. I believe that's it. Join our Telegram if you have any questions regarding anything, and if you wanted any sort of testnet funds or anything, you can DM me on Telegram, and I'll send you some testnet money so you can go play with it and everything.
So my question is, what is the reason of making a cap on the sacrifice? Wouldn't you want to have as many people as sacrificing as much as possible? So what is the reason for the cap?
Yeah, so basically, we don't want to take too much, actually. We want people to do well. One place where Richard Hart and I will disagree, he says market cap doesn't matter. I say valuation does matter. Actually, it's not the end all be all. You have to make adjustments, but we don't necessarily need to give up too much of the token supply ourselves. We're pretty happy to have it. We just care about two things. One, having enough TVL, total value lock, to make the platforms big enough to be competitive and useful. And then two, getting the buy-in from the community. I think with that amount that I've set, I've achieved both. I've got thousands of people now that have sacrificed for these projects, and they're the biggest, most dedicated users in PulseChain. There's a lot of top, 10 sacrificers for Pulse and PulseX amongst our sacrifice set. So I do think we're going to be hopefully the first and the dominant players in these two respective spaces. So yeah, obviously, if I only cared about buying Lamborghinis, then I could just demand more money. But I would probably do things a lot differently. But I actually care about a good ROI for the sacrificers, and one of the ways I can ensure that is to make sure that they don't overpay. I think time will tell when we do look at returns, and for what we're doing and what some other things that have raised orders of magnitude more money than us, what they ultimately do in terms of returns, which one's better. But yeah, that's why we've done it that way.
So with this answer, it makes me understand that closing the sacrifice maybe could mean that the launch for the platform on Ethereum could be really close.
That's exactly right. The only reason we've kept it open is just to keep onboarding users. But yeah, as we get closer to the pointy end of launching, we will need to close it. So that's why I'm now saying we will close it by the end of February. We would like to launch as soon as possible. So the only thing that really standing in the way of that is just completion of the audit and a little bit more testing on Ethereum. And then we'll be deploying to mainnet, testing internally, and then making it public to you guys. So that's for Fiat, not for Phamous. But yeah, that's coming this quarter. I'm fairly confident now, unless something really weird comes out of the audit.
All right, Buck, Dylan, I see there are no more questions. This always means that the people are really watching the stream closely, listening to exactly what we are saying here. A lot of information were shared today about Phamous, about Fiat, about Fatty as well. And I want to thank you so much for what you are building, because I think that will bring more adoption to PulseChain, that will bring more engagement of the community, that will make the pro traders do their thing, and some people get wrecked, which is then at the end good for the market, good for Hex at the end, good for the RH ecosystem. So thank you for what you guys building. It looks amazing. It made me really, really excited. Some last words from you, Dylan and Buck?
Thanks for having us, and we appreciate it. I think this was a nice stream. And follow us, join the Telegrams, ask questions, and yeah, we really appreciate it.
To all the viewers, you find all the links in the video description to follow along and look at Phamous.io, at PHIAT.io, and all the links that you need to know. Thank you guys for being here. Don't forget to like and subscribe, and we will now play the outro, and then we are out of here.
Okay, so I'm hoping the book will be educational. Well, why? Well, because maybe it would be better for people to be educated than not to be, so that they don't have to suffer so stupidly, and so they could be less malevolent, and that the world would be a less brutal place. That would be all right. So that's part of my goal. I'm a clinician. I want to fulfill that part of my moral obligation to justify my privileged position in the social hierarchy, right? I'm a scientist. I want to test my hypothesis and see if they're correct, so I can advance the scientific domain and push human knowledge a little bit farther out into the unknown, right? And I'm doing that maybe because I want to be a good person, something like that. Okay, so now we're a long ways out in the moral hierarchy, and so now we might think about, well, what does it mean to be a good person? Does that mean something? Well, you think it does, because you know people who are good people, and you know people who aren't good people, and you make a qualitative distinction between them, and you know when you're being a good person and when you're not, and you make a qualitative distinction between that too. So I don't think we have to have a discussion about whether or not good and bad people exist. We might have a discussion about how you distinguish between them, but that's a different issue.